Alright, what's up guys? As promised, the video where I talk about the RSI indicator. Never mind. I didn't even upload the first version of my first YouTube video where I promised that I would be talking about RSI. And anyways, so this is my first real YouTube video. So today I want to talk to you guys about this thing down here. This is called, let me first remove the one on the bottom since we'll be talking about that one. Bro, since we're talking about this thing down here later. Okay, so the RSI. What is the RSI? The RSI is basically a representation of candlesticks. There's no new information. All the information that we have in this candlesticks is also in the RSI. It's just being reinterpreted and shown in a different way. So the RSI takes 14 candles, and like you can change the settings in here, but the base version is with 14 candles, RSI length 14. You can change it to 30, you can change it to 5, but most people use 14, and that's why we will be using 14 in this video. So what it does is that it takes the closes of each candle and creates an average. So most people use the RSI for overbought, like up here, that would be overbought, and down here, that would be oversold. And when it's oversold, they buy, and when it's overbought, they sell. That can work, but it doesn't really work in reality because the RSI can be overbought and then price just keeps going up. Like for example, over here, RSI is overbought, price still goes higher, and RSI is overbought, but price still keeps going higher. So simply using the RSI for just overbought or oversold doesn't make sense. That's not how you use the indicator. Okay, so how I use the indicator is that I look at these things down here. They're called divergences. We have bullish divergences and bearish divergences. And what a divergence essentially means, or what it is that we have a difference in the strength of subsequent candle closes. So what it means, let's find a clean example here, maybe where it's cleanly visible. Okay, let's just take this for example. So the RSI and TradingView, it has an option to mark these divergences, but most of the time it doesn't even mark them properly. For example, this over here, mark it as a bearish divergence, but it's not a real bearish divergence. But I will explain in a bit how to spot real divergences. So this here, this is a real divergence. This is a high quality divergence. Like the overall market structure is good to look for divergences, and then we have a real divergence. So how to spot a real divergence? It basically comes down to a divergence between the indicator and the price. So if price is making higher highs, but the RSA or RSI at the same time is making lower highs, that's what we call a divergence. So price and the indicator are diverging. So how do you spot high quality RSI divergences? So there are a couple things we need to see. We need to see here in this RSI, we have this line here. This is the 70 reading. And this down here is the 30 reading. So these are the readings we mostly look out for. So we want to see price making for a bearish divergence. First of all, we want to see price making higher highs and RSI making lower highs. But these lower highs, they are supposed to mostly happen above the 70 reading, so above this line. So here, price making higher highs, RSI making lower highs, and it all mostly happens above the 70 reading. So this is a clean bearish divergence. So now how do we trade these divergences? Because there's also more to it. So first of all, context matters a lot. Context really matters a lot. So we want to be looking, because all of you probably know the saying, the trend is your friend. And this is also true for divergences. So we have in trend or divergences in line with the trend, the overall trend. And then we have counter trend divergences. So overall here we are looking at GBP USD, and this thing overall is in an uptrend. Like overall, this thing has been in a really nice uptrend. So like after the divergence up here, this pretty much market a top, but this is something we'll talk about later, and especially in order flow. So this is a counter trend divergence. With counter trend divergences, you want to be more aggressive with your take profits. Like you don't want to take a trade based on a counter trade or counter trend divergence, maybe something like this, and then have a target like this. That's not how it works, because overall GBP USD here on the asset in question was still in an uptrend. So you can use these counter trend divergences to scalp. Yeah, but if you want to trade longer trades, higher quality trades, look for divergences that are in line with the overall trend. That's when they have a real power. That's when they are really, really nice, really, really strong. Okay, let's see if we have a somewhat good example in this uptrend. Mm. Mm, mm, mm. Is there? Okay. Not really seeing a perfect example right here. Okay. Is there something else? Okay, well, I guess we are unlucky currently, but yeah. So in general, maybe a quick recap of what these divergences are and what we want to look for. So if price is making higher highs and RSI is making lower highs, this is a bearish divergence, and we want to ideally trade a bearish divergence inside a downtrend. So if price is already going down and we spot a bearish divergence, that's a really good signal for continuation. Exactly. And then the opposite thing is of course true for an uptrend. If price is locally doing this and the RSI is making higher highs, that's a bullish divergence, and that's a really strong signal that the uptrend is now going to continue. Yes, and now the final thing, a little bit of context. So we can expect these divergences, like we can look for them in certain places. Right here, there's not really such a good example, but let's say this would have been a resistance level. Like let's say somewhere here would have been a major swing high. And I think there was actually something like that on GBP JPY today. Yes, exactly. So this is actually a trade I wanted to take, but it didn't quite come. So yeah, I took it on one account, but I didn't catch that entry. I shorted it a bit lower, like down here, basically. So this is a really nice example. So this is a major swing high. Like if we zoom out, this is a big, big swing high. So if we now zoom in here and look at the RSI, so price is making equal highs, which is, by the way, also fine. If price makes equal highs and the RSI is making lower highs, that is also a bearish divergence. So if we look at the overall scenario, we have a major swing high. If we zoom out on the 1 hour, like this is a price is pushed up very far. We are very overextended. So this is now a scenario in which we would like to see a divergence. And this is exactly what we got here. So I think I was in the 15 minutes before. Yes, exactly. So we can see here, price making equal highs, RSI is above the 70 reading, and it's making lower highs, lower highs, lower highs going down. And then what do we get? Price doesn't push further, but we get a big puke down. And this is essentially an A+ scenario to trade a divergence. Major swing high, like region of interest, it could also be a swing low. Like if we have a, for example, a support level or something, or resistance level, and we get these divergences, remember, everything matters within context. That would be clean. Like this is a really clean example of a bearish divergence. Yeah, that's it for my first informative video. I know it was probably a bit scattered, but I'm still getting used to it. And yeah, if you guys have any questions, you can let me know in the comments. And yeah, maybe I'll make a more refined version of this in the future. All right.